What if I told you a single trading strategy by a global giant could shake up India's entire derivatives market and put small investors at risk? Welcome to today's video where we will discuss the Jane Street case and what it reveals about India's booming but risky derivatives market. We'll break down the SEBI investigation, the allegations, market losses, and most importantly, what it means for millions of small investors like you. So in July 2025, SEBI accused the US-based trading giant Jane Street of manipulating India's derivatives market. SEBI suspended its operations until it paid nearly 4,844 crores, alleged to be the profits from unfair trading practices. This has now become one of the biggest cases of market regulation in India. India's stock market participation has exploded. Registered investors in derivatives jumped fivefold in just 5 years. While this looks like financial inclusion and democratization, the Jane Street case shows that this boom also carries hidden risks. What was the allegation? SEBI alleges that Jane Street manipulated the bank Nifty prices using a pump and dump scam. Essentially, they pushed prices up artificially and then profited massively by selling put options when prices fell. SEBI began investigating in April 2024 and tracked trades through NSE monitoring. Let's talk about the market losses. The bigger picture is worrying. SEBI's report shows that retail investors lost around 1.8 lakh crore in derivatives trading between 2022 to 2024. 91% of small traders lost money. Only a marginal improvement from the earlier 93%. That means for every winner, there are 9 losers. So what was the policy response? To reduce the expiry day gambling, SEBI has banned weekly expiries for most index derivatives. They've also strengthened monitoring of complex trading strategies and are working with brokers, associations like ANMI to discourage reckless trading. Let's talk about the derivatives popularity in India. India has now become the world's largest derivatives market by contracts traded. But unlike developed countries, while derivatives are used mostly for hedging, in India, retail investors often use them like lottery tickets, betting on short-term movements. Now, this mix of huge participation and poor financial literacy makes India's markets highly vulnerable. Cases like the Jane Street's manipulation do not just hurt individuals, they can damage overall investors' confidence and create systemic risks. Let's recall the basics. Derivatives are contracts linked to underlying assets like stocks or indices. Options give right but not an obligation to buy or sell at a fixed price. And SEBI itself was born in 1988 and given statutory powers in 1992 after the Harshad Mehta scam to protect investors and regulate markets. Past precedents: SEBI has dealt with market misconduct before, from insider trading to front running. But the Jane Street case is unique because of its sheer scale and involvement of a global trading powerhouse. Why it matters? This matters deeply because India's household savings are moving into financial markets like never before. If derivatives are misused for speculations, small investors can lose everything, turning financial inclusion into financial overexposure. So, what next? Experts suggest stronger oversight on algo trading, more investors' education campaigns, shifting focus to long-term investing. Some even argue for graduated entry barriers. So not every first-time investor can jump directly into risky future on options. For UPSC mains aspirants, this topic fits into GS3. A good question to practice is, the SEBI Jane Street case reveals both the strengths and vulnerabilities of India's growing derivative market. Critically analyze the regulatory, economic, and social dimensions of derivatives trading in India. Try structuring your answer around regulation, market risks, and social consequences. To conclude, the Jane Street case shows SEBI's strength in protecting markets, but it also reminds us that India's derivatives boom is fragile. And without investor awareness and proper safeguards, growth could easily turn into crisis. Thank you for watching. If you found this breakdown useful, do not forget to subscribe to Vidyarthee Education for more in-depth UPSC and current affairs analysis. Also, a quick note for our aspirants, we are providing daily news analysis PDFs exclusively for our subscribers to make current affairs easier to understand. For more details, just text us on our WhatsApp number. You'll find it in the description. See you in the next video. Till then, keep learning and stay curious.